Good afternoon or good morning, everyone, and welcome to the Annie's Project Mitigating Risk Across Common Barriers to Profitability webinar series. Today, we're going to take a little deeper dive into benchmarking and financial analysis. And this session is being presented by yours truly, Doris Mold. I am co-CEO of Annie's Project, and I'll talk about myself a little bit more here, but I wanted to just have Carisha Devlin, who is my co-conspirator here, introduce herself. She's going to be working behind the scenes during today's webinar.
Good morning or good afternoon, everyone. As Doris said, I'm Carisha Devlin. I'm her counterpart as the other co-CEO of Annie's Project. And I'm going to be, as Doris said, behind the scenes today. I'll be watching the chat. So if you have any questions that you'd like to ask Doris, just put them in there. Thank you.
Okay, great. Thank you, Carisha. So today, in this whole webinar series really has been focusing on increasing financial literacy for farmers, growers, and ranchers, and it's being held in conjunction with our Know Your Numbers, Know Your Options for the Northeast program that's been going on during the month of March. And this program is a cooperative effort between Annie's Project, Rutgers Cooperative Extension, University of Maryland Extension, and the University of New Hampshire Extension. This program is free to all participants, and it is provided, the work that we're doing is provided through a grant from the United States Department of Agriculture, National Institute of Food and Agriculture, and Northeast Extension Risk Management Education, and of course, Annie's Project. And if you have participated in the previous sessions, you know what happened before, and if you haven't had the opportunity to see our previous sessions, we've had 3 that came before this sessions. We had record keeping, necessary skill at the beginning of the month. Then we followed on with enterprises, who are your winners and losers, introduction to the Rutgers cost accounting spreadsheet. And then we had a pricing for profit program last week. All of these sessions are being put up on YouTube, so you can find them there. And they will also be posted on the Annie's Project website. So these 3 previous webinars really serve as that building block for the benchmarking and financial analysis information that we're going to be talking about today. Just wanted to give a shout out to programming that we're offering. Annie's Project across the country is doing programming on deep dive into financials and understanding financial statements, understanding financial analysis and benchmarking a bit more, and just kind of getting more comfortable with the financial side of farm businesses, growing businesses, ranches, whatever. And as I said earlier, we've been doing a program up in the Northeast, which is finishing up this week. But we do have programs that occur throughout the country, and I know we have several of you who are participating in today live in other parts of the country. We have programs throughout the country, and some of our programs are in-person programs and some of them are virtual. So you're welcome to join programs from across the country in a virtual sense from many of the states. And then, of course, in person, you might find some of these programs. So Know Your Numbers is what we consider a second level program for Annie's Project. We also have what we kind of refer to as the first level, or the Annie's Classic program, and that's where a lot of people come into our program and get some basic information about the 5 areas of risk management. In this sense, during the Know Your Numbers, we're really focusing on the financial side of things. And so we have served over 18,000 women through educational programs in the last 19 years, and we're pleased to have you involved. When I say women, we have primarily women involved, but we do have folks that we have men that participate and folks that identify otherwise, and everyone is welcome to participate in the program, but understand that we kind of take a women-centered approach when we're doing our programming. So again, we're just finishing up our Know Your Numbers for the Northeast. And just also wanted to do a shout out to the people that have been helping with that program. Robin Brumfield, who you heard from on the enterprises who are the winners and losers, is from Rutgers Cooperative Extension. Shannon Dill is from Maryland, and she did our record keeping earlier. in this webinar series. And then, of course, you see Carisha and myself, co-CEOs for Annie's project, and Kelly McAdam, who worked behind the scenes on getting our pricing webinar organized, but also has been an active participant and educator in our Know Your Numbers work. So today, what are we going to talk about? This is really a huge topic. We could spend months, years kind of investigating and taking a deeper dive into financials, looking at benchmarking, looking at financial analysis. And I decided to break it down to talk a little bit about benchmarking, look at some of the resources that are out there, and then go through a financial analysis and benchmarking example and have some Q&A. And if we do have any time left over, we might go and look at some of those resources in a little bit more detail as well. So benchmarking, generally we have two types. We have the internal that takes place within your business, that is your information that you have collected over time. And that's where that record keeping really comes into play, doing a great job on keeping track of your information, making sure that you keep your information consistently and accurately over time. Really is important if you're going to do a good job on benchmarking, if you're going to do a good job on financial analysis or production analysis. You have to keep your information well, and you have to be consistent in how you keep that information. Also, we can benchmark ourselves externally. We can compare ourselves to those outside of our business, peers and industry standards. Sometimes it's difficult to get that information. We'll talk a little bit more about this in the coming slides. But you can benchmark just about anything, production or financial, as long as you have a way to get the information. So for those of us that are in production agriculture, we certainly kind of focus on productivity. Oftentimes we're talking about yields, how many bushels per acre, or how many pounds of milk did you get out of that cow, or what was the rate of gain on your beef cattle, or how many tons of hay did you harvest out of those fields. So oftentimes we look at those things as that productivity measures from the actual production process. And then we have the financial measures, which we'll be looking at a little bit more closely. And so both are important, and they're important for many reasons. But I'd like you to tell us why do you benchmark? Why do we benchmark? What do we use benchmarking for? Why is it important to benchmark? So if you could pop some things into chat, we'll have Carisha, hopefully we'll have some responses there. So I'd like to get your viewpoint. Why are we benchmarking? And if you don't know, then go ahead and say you don't know. So Carisha, do you have a good reason why we might want to benchmark?
Well, I was actually going to say what Ann popped into chat.
Okay.
She's asking, are there things we can do to improve? And I guess when I think of benchmarking, I think of comparing my operation perhaps to others of similar size. And is there things we might need to do differently?
Okay. So really benchmarking is and we hear farmers doing it all the time, right? If you go to the coffee shop, I mean, people are talking about, well, what kind of yield did they get? It's kind of like telling fishing stories, right? People might talk about, oh, well, I got this fantastic yield on that cornfield, or I did this or that. Everyone likes to look good, right? But so you might get some coffee chat news, and for some of us, it might be a little bit of an ego trip, right? But really, the purpose is so we can improve our operations and be financially sustainable over time, right? That we can stay in business, that we can be productive, that we can look for ways to improve. And so understanding what's behind those benchmarks and what's behind the numbers is really important, to help us understand if we're doing good comparisons and like. I see another response came in.
Yeah, from Savannah. She says that she benchmarks to know if what she's doing is making the work and time worth doing in her business.
There we go. There we go. So we've had a lot of comments over this series about, farming can be a wonderful lifestyle, but you have to treat it as a business if you're going to be successful in continuing to farm. And so you need to understand, is it what you're doing worth it, right? And everybody's ideal of what's worth it is maybe a little bit different. So you have your own kind of benchmark, internal benchmark as to what's important. And then you can also compare yourself out there to those industry standards. So if we have any other questions or comments that come up, Tricia, feel free to share those out. But I did want to give a little bit of kind of recognition to some things that are out there that I think will help people. Benchmarking and financial analysis. And the first thing that I think, and probably many of you are aware of this already, but the Farm Financial Standards Council is a volunteer group that got together really during the farm crisis of the 1980s. And they really saw a need for trying to standardize information. Prior to them getting together, agriculture really kept financial information in a variety of ways. Different lenders had different ways they like to look at things. Farmers kept things in different ways. People that were the educators at universities, land grants, and the like were using different methods. And everybody kind of had their own favorite things as far as what they like to measure and how they like to measure it. And there wasn't much standardization. And to make sure that farms, we were understanding what was going on with farms, it was recognized that we needed to have some standardization of how we calculate financial standards. And this group started out as a task force, and they put in thousands of hours to determine what might be the best way of doing things. And they came up with kind of, at first, kind of like a sweet 16 measures to use, and really kind of focused in and drilled down into what was really important. And then they decided that their work definitely was not done. I mean, they've been around for over 20 years now, and they have well over 20 years, and they've done just tremendous work on trying to standardize how we do what we do. And pretty much across agriculture now, we use most of the standards. There's still a little bit of people having their favorite thing, but I would strongly suggest that you get to know a lot more about Farm Financial Standards Council. This guidelines for agriculture, and it explains some history, but it more importantly explains, how to put together the financial statements behind the financial measures, what the different recommended financial measures are, how to calculate them. They've got great examples. There's really some good information in here. So I can't suggest this enough, and it's not meaning to do commercials for people, but this really is a good item for people that really want to take that deeper dive, and they offer it for $30. And so it's, like I said, it is a good document, and I definitely recommend going to their website and checking that out. But you'll see, as you look at information that's available more broadly in the public, you will see reference to the financial guidelines in many places. So where do we get these sources for comparative information? So of course, within your own business, from your own well-kept records, that's really kind of the starting point, right? And so we can use information from within our business and look at across time how we've improved, trends across time. So you can look at productivity of whatever you're raising or selling. And you can also look at, from both the production side and the financial side. So again, can't stress enough the importance of having good quality records and keeping up with that. And I know that some people, this is not their thing, and they don't like, they like raising whatever they raise. So if you're not into good record keeping, but really want to make sure that you understand how well you're doing over time. Get somebody involved in your business, get somebody to help you keep those records and keep on top of that. And just to reiterate what Shannon told us a few weeks ago, is that make sure that somebody is in charge of the record keeping for your business. It's not like I mean, other people can help with things, but somebody has to be in charge and ensure that they're getting done in a consistent and timely manner. So we've got information from our own records. Then we also have external information. There's some really good information out there for the public for free. A lot of it comes from land grant universities. There's some other information that's generally available, sometimes from lenders or other sources, maybe some nonprofits that provide information. And then there are private services as well, a paid for service. So farm business management programs across the country, there are states that have really terrific farm business management programs, and they do offer services to help you kind of keep on track, get your records organized, and then get your records at the end of the year analyzed. And they often have offerings where they offer to help compare and benchmark your information to others. And then, of course, we have other types of private services. Some lenders offer some services for a fee for groups of similar types of producers. So, for instance, up in the Northeast, I know that there's some things going on with wine grape growers, things like that, and dairy farms, things like that. And then there are also private consultants. And so they're for vegetable growers and for those that might be growing vertical farming in buildings or other types of operations like that. There are a number of private consultants that offer services. And you'll see too, if you type in benchmarking and financial analysis in the internet, you can, in internet search, you can certainly find different companies. But just make sure that you're a smart consumer of whatever information or services that you're buying. And so I wouldn't leap into it immediately. Some of these, if you have a larger operation, it might be well worth the money. Some of these can be rather expensive programs. I do know that some of the farm business management associations sometimes offer scholarships. They might be a little on the lower end of things as far as helping to get you organized. I know there are also some private farm management services as well. They're pretty reasonable, but know that there's kind of a wide range of expertise, a wide range of what gets charged for those services, and a wide range of what kind of information they can provide you with. But definitely some things to look into if you're not getting enough information. And that's one of the challenges, depending on what you farm or grow or raise or ranch. There's challenges finding some of the information that we might like to have. A lot of the what I call traditional commodity crops and livestock, there is quite a lot of information good information that's been gathered and it's available publicly. We're seeing that it's much more challenging in what has been classified as specialty crops for us to be have that information. And there are some special efforts I know going on right now as we speak to get those farmers enrolled and collect in farm business management associations, collect that information so we can have a better idea. Because when they collect that information and aggregate the information from those programs, the plan is then to release that information, some of that information for free. But the important thing is that they have to have a critical mass of farms and growing operations participating in those programs, first of all, for it to be a good number of enough farms contributing data, so you have enough good information available. And then also, you don't want to identify any individual farmer, and that's what all of these programs are very careful in doing is making sure that no individual farm can be identified that's providing that aggregated data. Just a few advice, and I'm not sure where all this came from. This is from quite a ways back. I've been teaching farm and agribusiness management for many years now, and these are some things that I provide advice to my students. I've worked with a lot of producers over time, and I'm a farmer myself. So just some kind of pearls of wisdom. So first of all, when we get into financial analysis and benchmarking, especially on financial measures, they help in asking the right questions, but they don't provide the answers. Just looking at numbers and saying, well, my debt to asset ratio is this, well, that gives you an indication of where to start and take a deeper dive into your information and try to figure out why the numbers are the way they are. And so you need to, start to develop an understanding of, your information and how the numbers are calculated, so you can have an understanding of what might be influencing your numbers. Also, judgment and common sense should be linked with informed application of the measures. So just keep that in mind as you're working through these things, and be selective of your choice of financial measures. And different measures are going to be appropriate in different operations. Certainly the 13 suggested measures from the Farm Financial Standards Council are measures that we'd certainly recommend, but there might be some other measures to look at that might be specific to your industry or your business. When I say industry, I mean your farm, your ranch, your greenhouse, your growing operation, whatever that may be. Certainly a benchmark is needed to assess your own measures from earlier years. And while it's useful to compare farms, make sure that you're comparing apples to apples. So relative measures, in other words, percents and ratios, are those measures that you're going to use. If you have farms that are substantially different in size, a measure like net farm income, which is a dollar amount, can vary widely. And so you might look at an operation and say, wow, they're making $250,000 in net farm income, and another farm might only be making $50,000, but that other farm might be quite a small farm and have relatively little capital invested, while the larger net farm income may be way overcapitalized. So you really have to make sure that you are taking those things into consideration. And a lot of times the benchmarking numbers, the information that is provided, provides you some understanding for size of farm, and so, or types of farms. And so you might want to, look for peers that have similar type of farming operations. But then it's also good to, once you've compared people that are similar size or what they're raising, it's also interesting to look at people that in farming and ranching and growing operations that maybe are bigger or doing something different, because that might give you some indication of some directions that you may go. Again, financial measures derived from incomplete or poorly prepared financial statements are misleading usually, and often lead to bad decisions. So make sure that your records are good and that your financial statements are properly prepared. And those are some of the things that we can help answer if you take your Know Your Numbers, Know Your Options classes. Also, you can get help from other professionals, and extension educators can help you out. Farm business management professionals, accountants, things like that can help you make sure that you have well-prepared financial statements. And of course, your lender will give you, in a lot of cases, an idea whether you've done a good job or not.
Doris, we have a question in chat. Sure. Christopher asks, how would you determine what those appropriate measures are if this is your first year in the industry? Okay, so appropriate measures. So I'm going to kind of show you, Christopher, here soon. We'll get into those, but I would say the Farm Financial Standards Council measures would be some of those things that I would start looking at. And so that those are general financial measures. And also what I would be looking for, oftentimes
although they're not perfect sources, I'll be looking at, for instance, if I can't find benchmarking numbers, which we can't find on some types of businesses. So let's say I haven't been able to find anything on cut flowers, for instance. So, okay, so how do I find out what might be a good number for cut flowers? Oftentimes, a lot of land grant universities and extension have what they call enterprise budgets. That might be a place to start. It's not perfect, but it gives you a good idea for kind of like what's typical, what's average, what can you expect? And they usually, in a lot of cases, give you the assumptions behind those numbers. How did they come up with those? So that's not perfect. I mean, in a perfect world, what I'd like is to have real world numbers that have been tested and kind of gone through to make sure that they're accurate by somebody who knows what they're looking at, and then use that published information. But unfortunately, we don't have that for everybody. But there's a lot of good resources here, and I'm going to share some of those here with you in just a few moments. And just understand too that even though we are doing benchmarking and we look at numbers and we look at how we compare within our business and outside of our business, they're not always necessarily absolute values that we always must achieve to be successful. They are guidelines that should be treated as such. So there may be some ways that maybe and you'll see some numbers here soon, that maybe you don't quite fit into that really highly successful category. That does not mean that over the long run you're not going to be successful as a business person, but you might have to rework some things to help you be more successful. So one measure at one time doesn't determine the success or failure of the business. But that being said, over time, if your trends in your numbers and your productivity are low, it's going to be difficult for you to sustain your business, and you're going to have some way of supporting your business through off-farm work or other types of money to keep the business going if you aren't successful in those different measures that have been identified. And also understand that the interpretation of the measures, many measures can be unduly influenced by things such as asset valuation. There are other things that influence them. So as you're looking at the numbers, make sure you understand what's behind the numbers and what might influence things. Let's say if you rent a lot of property rather than own property, that's going to adjust some of these measures as well. So let's get into some of these resources and take a look. So this might help you here. The first one is a farm finance scorecard. And you'll notice that this has more measures than the 13 that the Farm Financial Standards Council recommends. And what we're seeing here is a leftover of some of the numbers that some people just like seeing. So in most cases, you can see as you look at this scorecard, the scorecard, first of all, is divided up into the major areas. So liquidity, solvency, profitability, repayment capacity, and financial efficiency. And you will see that most things relate to, you can see that there's a ratio or a rate of return. So those measures are those relative measures that most of those are recommended or by the Farm Financial Standards Council. Where you see dollar figures, those are absolute measures, and those are really, they're okay to use for looking at your business internally, but they're not something that I would recommend that you use, comparing yourself like on working capital or your net farm income or whatever, comparing to other farming operations, because unless you know the size and all the details, it's really difficult to compare. So the ratios and the rate of returns here, the rates that you see, those have all been developed so you can make comparisons. And so these are kind of industry kind of standards for the measures. Again, there will be some variation on the theme as to, what's strong and there might be some slight variations, but this is kind of a good standardized way to look at your business and compare your business, to industry standards. So the green means go, good numbers. Yellow, just like a stoplight, means caution, and you kind of yield, kind of better take a closer look at this. And red is vulnerable. And so there's some things that certainly, we look at, and we'll go through a comparison here in just a few minutes. But, for instance, something like a debt to asset ratio, especially when you're just starting out in your business, it's saying that 60% debt to asset ratio, that's vulnerable. Well, when you're just starting out, and for a lot of people, starting out requires a fair amount of debt to get going. And so that is something that is a little bit dependent on where you're at in years in business and what you had available to you kind of starting out, things like that. So again, it's good to know, well, what's behind this. Is that debt to asset ratio is somebody that's just a beginner, or is it somebody, if you're at 60% and you've been in business for 40 years, that may be a challenging number for you. So again, it requires additional investigation. So that's one place, and this comes to us from University of Vermont and the Center for Farm Financial Management. So here's another place to get information. So this is from New York, and it's their Pro Dairy Farm Business Summary and Analysis Program. And you can see this is kind of a nice chart for anybody that's into dairy and you're especially from the Northeast. This might be a really good chart for you to take a look at. It tells you how many cows and tells you a bunch of information productivity wise, but it also gets into cost control and milk price, and really lays out some interesting numbers, and you can look at numbers across time as well. And so this might be something that you would use, to pull up and, compare your farm to, and just kind of see where are you in the realm of farms that are in the Northeast. So this is, and there are examples like this all over the country. So I just pulled a few things here. So it's not meant to be all inclusive. Then there's things like there are people that are out there trying to do some work, especially in what I'd call more niche crops or niche markets. And we know that direct market vegetable farms are becoming more and more popular, but it's really challenging to get information from these farms. Sometimes it's because the farms are a little smaller and maybe the price to participate in a farm business management program is kind of beyond where they're at. So I know I found this report. It's interesting because they didn't do any of this, what I call the standard farm financial standards measures. And I just included an example here of one thing. They went into farm business net income. And so you can see the scale, the farm size here, again, relatively small, but they went through and they gave us some net farm income information. Now, this is a good starting point as far as actually trying to collect information. I'm hoping that over time that they'll be able to collect more information and kind of broaden out their approach. But they collected information on a number of different things. I would really encourage you to look at the publication. But again, on this, you have to understand what you're consuming. This is information from 39 farms. So you have to ask yourself, is that enough farms? Well, if you're a small vegetable grower, you might say, well, this is the best information that's out there. I'm going to use this until I find something better to see how I compare. But I'd really encourage you to look at that whole report if you have an interest in this. Another possibility here, this kind of an interesting Kentucky Farm Business Management, they put together a whole grain farm analysis, some quick facts, so you can take something like this and look at, what kinds of farms are out there, what kind of yields are people at. And this is another way to benchmark. You say, okay, well, where am I on corn yields? Where does my farm fall within this realm? And you can kind of see where you are. Are you in that top echelon? Are you in the bottom? Are you in the middle somewhere? And where are these other farms that, are your neighbors, your peers, competitors? And gives information both productivity wise and some income information as well, and some returns information. And you'll notice too that they have the financial ratios for 2019 for those grain farms there. So that's a really quick and dirty look at things. All these farm business management associations have more detailed information that, again, if you want to take a deeper dive, I really strongly suggest you doing a little tour of some of these programs that are out there. Another, and this is getting to be kind of old, but I put it up here because it's some of the only information you can find publicly available. But Iowa State has a fantastic ag decision maker library on all sorts of topics. So this is just one of many documents. So they have some really good, what I call, the old term was fact sheets, but good fact sheets, just kind of giving you some information to help you understand something in more detail. And so, for instance, this example gives you some ideas. I know it goes into fruits, it goes into pastured poultry. And obviously we have mixed vegetables on this front page, but it gives you some ideas of what kind of income you might expect, what kind of sales you might expect, kind of what are some typicals. And again, not perfect, and it's 10 years old, but it gives you a ballpark. Maybe it's an old ballpark, but it provides something. And that's just unfortunately kind of the nature of the beast right now, that we are having trouble having that fruit, vegetable, other types of specialty crops. We don't have that information that's publicly available. And it's really necessary because a lot of people have smaller operations, and it would be very useful to have that information. So fingers crossed that information will start coming soon. Another item that I wanted to make you aware of, and if you participated in our second webinar, is the Rutgers cost accounting spreadsheet. Dr. Robin Brumfield, who has been one of our partners on this project, developed this. And for those of you that grow in a greenhouse or have outdoor growing ranges, it has information that you can put in for both. And it really gets into a lot of detail, and it covers, putting information again. So it requires you again to put in information and have good record keeping. So this is not a record keeping system. So you need to take your information from your records and transfer it in here, but input information from your income statement, balance sheet, and other information, and it can help you get into benchmarking. And this is actual information from that spreadsheet. And she's got a representative. She actually did a study of greenhouses in New Jersey, and this was the average figure that they had. So your figure, and that was the average figure. And so you can see now how this information, this is part of that spreadsheet. This is how one tool that you could use to start benchmarking yourself. And so you've got net farm income, so profit. Now, in this case, they've got a recommendation here of at least $50,000 per family. And so that's based off of, and again, this is not a Farm Financial Standards number, but it's based off of the experience in that industry for what you need to have for net income. So, and it gives, the formula and the explanation. So I think tools like this are really good to help you understand your numbers and to help you understand, kind of where your business is at. And so again, gross profit margin, return on equity, those are other important measures again. And you can see that these businesses, in this case, as far as rate of return on equity, are doing quite well. And the gross margin again doing well, profit margin, pretty close to what would be considered well. So again, these measures, different measures, different farms are going to look different, and it's kind of all relative. So in this case, this grower, this greenhouse, the average greenhouse operator is doing quite well. However, that's 1 year of information, right? And that's the other thing you have to look at. You don't look at just 1 year. You start off when you're just starting out, of course, you have your first year information and you analyze that. But as you're going through time, it's important not just to look at 1 year, but what are the trends across time as well. And this again too is from Robin, and it's pretty standard information when we're talking about profitability. As far as profitability is a major factor when we're making most financial decisions. So if you're going to kind of pick favorites to look at, certainly profitability has to be one of the top ones. Of course, we'd like to look at all of those different financial measures, but over time, profits are going to be driving the solvency and liquidity of a business. That's going to determine if you're making money. I mean, it's common sense, right? If you're making money, then you can pay down debts. Hopefully you can potentially have more liquidity, more money available to cover needs as they come about. And then financial efficiency ratios often are tied very closely to profitability. And again, this is again from that Rutgers cost accounting spreadsheet. Interestingly enough, asset turnover ratio on both Rutgers and then that Farm Financial Scorecard are under financial efficiency, but Farm Financial Standards Council has moved it over to profitability, and they're very closely linked. So I think people probably are going either way on it, but the important thing is to calculate it and look at how efficiently you are using your assets, and that's really important to have an understanding of making sure that you have enough assets that you can generate income, but not so many assets around. And this is a real problem for some farms. They often take advice that, okay, just go out and buy some more capital assets because you want to reduce your tax burden. And so sometimes we make buying decisions based on that we want to reduce tax, we want to keep our depreciation down, increase our depreciation so we can reduce our tax. And so sometimes, that will definitely impact our asset turnover ratio. If we are overcapitalized, if we have too many assets around for the level of money that we're making, we can look like we're not profitable or that we're not being efficient with the use. And liquidity, again, the ability to meet current obligations. And so we want to be able to pay off our bills as they come due. That's a nice feeling that you can get people paid off and keep up with that. And so again, you see the ratios, the current ratio is one of those that are recommended by the Farm Financial Standards Council. Working capital is just a dollar figure for you to compare internally to your business, but again, not something you'd compare externally. And then solvency is the ability to meet your loan payments. And really bottom line is that if you had to sell your business today or tomorrow, could you pay off all of your debts? Would you have money left over? And that's what we're looking here. And the primary one that Farm Financial Standards Council is looking at is that debt to asset ratio, and that's total liabilities divided by total assets. And again, here's a recommendation that for greenhouse growers, and these recommendations might be slightly different than the recommendations on that general scorecard. Some other great resources if you want to learn a lot more about financial statements and how to prepare them, or the interpretation of financial statements and ratios. Really encourage you to go to the IFSAM website from the Center for Farm Financial Management. They have these chunked out. They're actually videos, and they talk through everything and give you examples, and you can replay them as much as you want. And some of the videos are really short, so they're very bite-sized and consumable, or you could sit and watch a whole lot of them as you go through. And you can see that they have, for the developing, they have it broken out on accounting and record keeping, the balance sheet, income statement, statement of owner's equity, statement of cash flows, and then the ratios. So they give you kind of a taste of the ratios under the developing financial measurements, financial statements and measurements. And then they have the whole section on interpreting. So really great resource, because we don't have enough time to cover everything in this session. I'd really encourage you to go there, and it's free, learn at your own pace, whatever. Really great place for a review as well, even if you have experience. Another great resource, especially if you are in some of those traditional commodity crops, FinBin, from the University of Minnesota. Again, I'm not doing a U of M commercial, but Center for Farm Financial Management has some wonderful free tools. Now, FinBin is one of the largest, if not the largest and most accessible farm financial database in the world. And it brings together farms from many different farm business management associations across the country. And it's growing, so you might not see the states that you're interested in now, but it could be that they might be added in the future, and you can certainly encourage your states to include data. But the one thing about FinBin is that the information is reported in the same way. They take a tremendous amount of effort to make sure that the information is accurate, and there's over 3,000 farms from 7 states currently in the database, but it really is some of the best information that we have available publicly and free. And there are different ways of going about it. You can do a summary report, you can do a benchmark report, you can even compare your own farm's information with your peers. So you can do some benchmarking right within this application online. So here's an example of one kind of benchmark report. You can benchmark crops, you can benchmark livestock, you can benchmark farm financial standards. And in this case, I've produced, these are Minnesota dairy farms. And so there are 306 included in the database. And this is for 2020. And so you have the median results, as you can see, but then you have the percentiles. And so you can really do a good deep dive into looking at, well, what are other farms doing? And where are they at with, as far as expenses, productivity, all of those kinds of things. So there's some really good information there. And another type of information is just the summary information that they can provide. And in this case, I've done a summary of financial standards. This isn't a benchmarking report, but this simply is reporting, and I'm trying to remember which state. I think this might be Pennsylvania or Ohio. But again, you can look at a particular state, you can look at particular numbers, but I decided to run this over a period of years so I could look at and maybe compare my farm to see, well, how am I compared to average farms in a state? And how am I doing profitability-wise? How am I doing liquidity, solvency, and so forth? And so really good information, easily accessible, and it's free. The other part is, and you don't have to set up an account or anything. You can just go in and run reports, and it gives you explanation of how to get started and how to run things. And a really great place, great tool to have. And so you can also enter your ratios and compare to peer groups within. So you can either, your ratios already, you can plug those in, or you can just plug in your data and it'll help you calculate your ratios. So great tool, and I strongly encourage you to use that. So I ran this report. This is a benchmark report, and this is for the financial standards measures. And again, most of these are those Farm Financial Standards Council measures. There's a few extras in here. But when we look at that benchmark and then compare it to this Farm Finance Scorecard, so I thought it might be kind of interesting for us just to look a little more closely. So in the case of liquidity, and again, this is our ability to pay bills as time goes on. So we can look at, I pulled the group median and then I had the 10th percentile numbers here. And so if we look at the current ratio, and the current ratio here is 1.84. So as we look at this, they are in that kind of gold or yellow, that caution area for the group median. Now, if we look at those people that are in the 10th percentile, a 0.63, they are in the vulnerable area most definitely. So at 0.63, they are not able to cover all of their current commitments. So you need to have at least one, a ratio of 1, be able to, that means that your debts and your current debts and assets are equal. That means that if you got rid of all of your current assets, you could pay off all your current debts. And so you want that ratio definitely to be well over 1, and in this case, they're suggesting over 2. So just again, that's one of the measures. But as we're kind of running low on time, and I want to make sure that we have time for some questions as well, I'm going to highlight the farm debt to asset ratio. That is the recommendation from the Farm Financial Standards Council, and in this case, farm debt to asset ratio, again, for the median farm was at 44. So again, they're middle of the road. They're kind of in that area. They're not vulnerable, but they're not strong. And then again, our 10%, they're definitely in the vulnerable area. So at 85%, that means that they're 85% in debt. That means that they own 15% of their business and the bank owns 85% of their business. So think about that. That's not much cushion there. So if you have a bad year, that cushion can quickly evaporate, and that it can make life very challenging. And if you have loans, which this would indicate, if you have loans, your bank might be having a conversation with you. All right, looking at profitability, let's just look at one of these again. How much money are you making for the use of your resources? And so looking at where else could I invest my money? And that's one question. Or how much am I making enough money to pay for the credit of the money that I'm borrowing? So let's look at rate of return on farm assets. In this case, they're at 6.4, and again, they're kind of middle of the road. They're not burning it up, but they're hanging in there. They're pretty good, but not great. But then we look at that 10th percentile, negative 6.4. Wow, I mean, that's way in the red. Big trouble if you're at that point. And but again, that means that you've got some negative numbers there. You can see that net farm income was negative, but this is 1 year. Maybe you just had a bad year. Maybe you had some major disaster happen. 1 year in and of itself is not the determinant for how life is going to be. But you need to, really kind of watch things. Let's say you had something wipe out. I mean, I know in the case of our farm, we had some bad feed several years ago. It devastated our dairy herd. We had a bunch of cows that died. Production dropped. It was horrible, and we had some real struggles. But understanding kind of what's behind those numbers is important, and being able to share that information if you are having some struggles, being able to share that with your lender is important. Repayment capacities, again, are you able to pay off your term debt? And this is interesting here. We've got term debt coverage. Oops, sorry. Don't know what happened there. So term debt coverage ratio in this case is pretty good. They're 2.26, so they're able to pay off their term debts, and that's keeping people happy. When you're at zero, you're not making people happy. You're not covering your term debts. You're not making payments on those debts. Again, you need to have some conversations with those people that you owe money with, and try to get some, hopefully, grace. Or if this is a long-term issue, year after year after year, you may have to be looking at taking more drastic action. Then finally, financial efficiency. And as I said, Farm Financial Standards Council has put asset turnover up into profitability, both FinBin and on the financial scorecard, have it down here in financial efficiency. It doesn't really matter where you have it. Take a look at that number. How efficiently are you using those assets? So in the case of the median farm, 34.6, it's that in-between stage, kind of watch out. Asset turnover in the case of the 10th percentile here, very low. So they're not using their assets efficiently. They're having some struggles. The last four measures, operating expense, depreciation, interest, and net farm income ratio, those all add up to 100. So if you're doing poorly in one, that's going to impact the rest of those. But the operating expense ratio here is okay. And it again depends on the kind of business. Some people have tighter margins than others. So I know that is kind of a very quick run through here of some of those and how we might apply some of those numbers. I'll open it up to questions. I know that Carisha had to depart, so I will be happy to answer any questions that you might have. So, I think an important thing to understand that there are, I'm going to stop my share here so I can see the chat. But, I think it's really important to, go out and find things that you're comfortable with, and don't try to benchmark everything all at once. Really look at, kind of maybe where you have a problem area in your business, maybe focus on that and kind of, look at that first if you're new to benchmarking, and look at some of those, a few key areas. Don't try to benchmark all of the numbers for financials, all of the numbers for production. Any questions or comments? Well, we really appreciate your involvement in today's webinar. We hopefully will take even deeper dives. There's a lot more that we could cover. As I said at the beginning of the session today, we could really spend, I've spent entire semesters of classes on this, and we really appreciate your attention today. We're going to be offering some new webinars in the coming months, so please keep your eyes open for those.